What's up, everybody? Hey, it is another edition of YouTube Live Veterans Day style here on Everything Phoenix, guys. So happy Veterans Day out there to all Americans, number one, but most importantly, to all veterans who served our armed forces. I have a long family history of veterans in our family from my great grandfather in the Civil War all the way down through my grandfather in World War II and my father in Vietnam, almost in Vietnam. He actually was not deployed. There was a troop drawdown right before he was about ready to jump down there from Okinawa at the time. So I did not serve in the armed forces. I did the college route and played football in college and all that fun stuff. But I thoroughly thank our veterans. I don't care if you're as young as they allow you to be in there, all up to age whatever, before you retire. Thank you for being a veteran and for serving this amazing, wonderful country of ours here today. So happy Veterans Day to all of you guys out there, and even for the people who are serving armed forces who are active duty. Thank you so much, and reserves for your service to our country as well, guys. It means a lot to me personally as an American citizen, and I know to obviously the vast majority of our American citizens as well. So thank you so for that. Now we're going to jump in here, guys, and talk about some real estate. Now we had this big event, kind of a big event last Tuesday called a presidential election, and there were some Senate and House races and a bunch of local elections as well for local cities across America. Phoenix was no different. And because the show is called Everything Phoenix, we're going to jump in and talk about the effects of some of the outcomes of the election for the local Arizona economy and housing market. We're going to jump into some of that because what does it all mean now that we have clarity in most of what's going on? Now, I say most because for some reason, Arizona has a hard time compared to other states in America counting ballots and figuring things out, I guess, right? I don't know what in the world's going on, but man, we are just late to the party. It seems like every single time. I don't know why. Maybe I should research it. Maybe I should go volunteer. I don't know, but we'll get our stuff figured out here eventually, I'm sure. But here's the situation that we're going to jump into right now. But before we go to any of the results of some of these things that happened here last Tuesday, we are going to talk about the housing market. Okay. And we're going to jump into the housing market right now because at the end of the day, that is what is actually the most important. So I am going to actually share my screen here in a second, and we're going to rock and roll. So here we go. Give me a second, guys. I'm going to pull this up. And we are off and running. Here we go. So you can see the Crawford report, guys. We have a market index of 88.7. What does that mean, guys? I won't spend much time on this, but if you haven't joined this channel before, you maybe don't know this. But anything on the Crawford market index, the CMI, between 90 and 110 is a balanced market. And for the first time in, I don't know how long, guys. It's been years. I mean, honestly, in 2022, this was not the case. In 23, this was not the case. Now, in 2024, we are in a buyer's market by data points and data and facts only, not the emotions. Well, Kelly, it feels like we've been in a buyer's market for quite some time. It might in certain parts of the valley for sure. But overall, Maricopa County, the greater Phoenix MSA, now officially in a buyer's market. It was last week too, to be fair. It was last week too. It was at 89.9, I believe, last week. And now it's at 88.7. We are in a buyer's market across the board, guys. What does that mean for you as a buyer or seller? Well, real estate, guys, is still localized, as we know. It's still localized, okay? So just because this says that doesn't mean in your little neighborhood, in your suburb city, it may be a crazy seller's market. I'm still seeing that in a few places across Phoenix. But on the other hand, there's some neighborhoods in which it is crickets. And we know this too, not just because a property isn't selling necessarily that fast, but because you look at the past 6 months of sold data, and there were like, I don't know, let's say in this example, 5 properties that sold, but on the market today, currently, there are 13 properties available for sale and no properties that are pending under contract. That's a problem for that neighborhood, okay? So now it becomes either you have to wait this out as a seller or take it off the market and wait it out even longer, or get your price a little more competitive. And that's not the most fun thing either as a seller, right? So a lot of people will take their home off the market if that's the case, but there are still some neighborhoods, guys, in which there is good demand over the supply. So I'm gonna share my screen and we'll go back right over here because here is a active listing chart. You can see right now that they are increasing, guys. Right now, the blue is the 2024 line. Check this out, guys. It is going up and up. We are now at the same point we were in 2016, actually above our active supply inventory than where we were in 2016. You can see 2014 was even higher, and of course 2013 it goes higher and higher. Matter of fact, here's the interactive chart on this. Here you go. You can play with whatever we want. We want to throw in 2013. Okay, there you go. 2013 is in purple, and it got even higher, right? So we are trending that way, guys. We have a surplus now of supply of homes that no one's talking about. This is wild, guys. Data over drama. We always say, right? And here you go. You can see right now the active listings in 2023 skyrocketed. Okay. You can see in 2022, they really skyrocketed. Look at this olive green line just increasing. Why? Because interest rates went up. That's why supply went up. People stopped buying. And you had this market that depreciated in the second half of 2022. Now, at the end of the day, it wasn't that bad. Why? Because the first half of 22 and the entire year, 21, the market went bananas. So everybody had this excess, this equity in their property. So if it went down 14% after going up 35%, it wasn't that big of a deal. But what about appreciation? Let's look at that right now. Okay. There's the active listing chart. But how about appreciation? We're going to go right here. Annual appreciation based on monthly average price per square foot. Here you go. 2024, you can see right here, this blue line, boom, 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 and it is trending down, okay? Now, it just crossed, you can see right here, is 0.5, negative 0.9. So in October here, just recently, it went negative, and then negative 0.6. So it's not much. It's not negative by much, but it is negative. You see over here on the far left that you have the negative numbers, -2, -4, -6 over here on the far left. And then, of course, 0 is right here. And then it goes up from there. So most of the year, despite 7% interest rates or higher, we were trending with positive appreciation. Now, this is pretty common, as you can see on the chart. Arizona is a cyclical market, and you can see that the first 5 months or so of the market, typically you have appreciation. Now, 2023, it started to go down a little bit early, which we talked about this on our show last year, and that was not the norm. And it actually spun around really quick here in the summertime, which is even more bizarre because typically it goes down in the summertime, but it didn't last year. Well, this year, 2024, it did. It got slow. We felt it personally, boots on the ground in the trenches, selling property for our clients and helping clients buy properties, etc. We felt it. It got slow, guys, in July especially. And then August, it took a nosedive, and now it came back up in September, and now it's starting to hopefully lightly decrease through the end of the year. If it can increase a little bit, even better. But guys, you have to understand that we are up significantly year over year. Excuse me, 2 years over 2 years, 3 years over 3 years. So there is a lot of room. Not that anyone wants to lose appreciation or equity, but there is some room to go down. Now, if I put in here 2014, let's check this out. The green line right here in the middle. There was a lot of appreciation in 14. Now, you see 2020, which is interesting, the brown line. Look at this, guys. COVID hit right about here, and appreciation still held. It dipped a little bit, and then we had this monster increase through the end of the year. Through the end of the year at 17% appreciation in 2020, the year of COVID. Okay, so you can now if you want to check out 2009, check this out. Okay, 2009. Oh, we had some appreciation. It was minus 39%. That actually looks pretty good. Look at this, guys. It increased. You're like, holy cow, it's great. Well, it still finished the year minus 7.5% on the appreciation side. Okay, it was down here minus 44% in 2009. Let's check out 2008. Okay, take off 09. Look at 2008. Just nosediving. 08 was not a good year. Guys, I bought my first house that I still hold today. Okay, which is a whole other story because I'm a big fan of buying property and holding and waiting. Okay, don't wait to buy real estate. Buy real estate and wait, right? Well, I bought my property here in like April 2008. Market's already down 20%. It's down. It's getting crushed. There's plenty of time to, it's got to come back up. Well, I bought and it didn't. It kept nosediving from minus 20 down to minus 38.1. Okay. There's a straight line for that day. All right. So the moral of the story, guys, is, and we'll jump into sales per month here for a second, but the moral story is that property, it went down from minus 20% for the year when I bought it, and then it continued to decline another 18% to the end of the year. And then it went down a little bit further in 09, down to 44%. That's a net from where I bought it, minus 20 to minus 44. It's a net negative 24% of value I lost in that property. However, because the real estate market is cyclical, it came back. Since then, 2013, we moved from that property to another property, kept the property as a rental house. Guys, I bought the house for $327,100, and today it is worth $710,000. Although it went down to about $277,000, $275,000 at one point in time. Now, the average investor, average buyer might panic in that situation and sell. And that's what you got to get over. Stock market alike. You don't sell when you panic and have fear that sets in too deep to actually use emotion to act and then possibly make a not good financial decision. So thank the Lord, I did not do that. And here we are today looking really nice. Now, obviously, time is what needs to be on your side in that situation. Okay. Just a little story I want to share with you guys. I think it's very important, whether it be a stock or a house or whatever, an asset, to, you buy when others are greedy, or you sell when others are greedy. You buy when others are fearful. Okay. That's an old Warren Buffett quote. Now I'm going to share my screen and go back to sales, because that's important too. Sales per month. Check this out, guys. You have the blue line again going down, 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 down. Okay. And then it went down to 5,500 homes transacted last week-ish. Okay. End of October, being November here. And then this past week, it actually trended up to 5,600. Okay. That's interesting. So you have supply that's increasing tremendously over here. Okay. You can see this blue line right here is going up, 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 up right here. But you have sales that are actually going up too as well. This is a good sign. This is a good sign right here. You have sales that actually trended up. Now, will that continue? I don't know. My guess is it probably won't, because as you head to December, the demand can sometimes decrease, which will cause the sales, the demand and supply to get further apart, which will cause potentially prices to continue to soften. Okay. So if you want to buy, guys, I'm telling you right now, all the indicators will tell you this is a good time. The market's cyclical. It's seasonal. It's going to come back up in January like it does almost every single year. So here's my point. Look at these last years, guys. But Kelly, I thought you said it goes up. Well, it does, but there's usually a little bit of a dip at the beginning of each year after Christmas. There you can see it. It happens every year. And then what happens here about the fourth week of the year in January? Boom. V bounce, a V bounce, a V bounce upward. And then you start to have people jumping into the market to buy, snowbirds buying, and the whole 9 yards. And what does that do to prices? It usually increases them. So you're going to have more competition in January, February, March, April, May, no question about it. If you are thinking, I'm going to hold off until January just because I don't want to mess with it during the holidays, I would submit to you that this data right here is a good argument as to why possibly you should strongly consider acting between now and the end of the year. If you want to make the best decision financially, the data would say that would be the thing to do. But I understand every person's situation is different. Give us a call. We'd love to chat with you about this for your specific situation. We can pull up micro granular data on the Crawford report to help you make a decision for the area looking to buy as well. It's not just our opinion. But 480-660-5974 is where you can reach me. 480-660-5974. And of course, on social media anytime, hit me up there. You can text or call. Now, let's share my screen and go back to a few things about development, okay? But I want to just make sure you saw this last graph on the monthly average sales price per square foot. Now, it's a lot of data out here, a lot of years. Let me take off 2015, 2016, 2017, 2018, and let's check with the year before COVID, 2019, and see what's going on. You can see, guys, look at the amount the prices have increased on a price per square foot basis in the Phoenix area since beginning of COVID. The whole year, 2019, things were kind of somewhat flat, went up a little bit, up, and it finished the year at $179 a square foot for an average property, single-family house in the Phoenix area. After COVID, it went up to $209 a price per square foot. And then check this out, guys. This is where the big jump happened. End of 21, $265 a square foot, price per square foot. 2022 ended up right where 21 because it came down. It peaked up here, guys, at about 305 a square foot, 305. And right here, guys, in 19, it ended at 179. Wow. That's incredible. That's almost double, right? That's a lot of money in terms of price increases. And then you have 2023 ended at 283. And right now, guys, look where we're at. We're at 288 a foot. Despite all the things that are going on in the country, despite all the interest rates staying, the mortgage rates staying at 7% plus on the 30-year fixed, look where we still stand at 288. Now, I know a lot of people want to say, well, it's unaffordable and we got to wait because it's going to come down. Possibly. I'm not going to say it's not. It could. In fact, that would help a lot of people if it came down a little bit more and prices could be a little bit cheaper. However, if rates come down, that also will have the same effect because people don't buy a price tag when they purchase the house. They buy a monthly payment. And if that monthly payment comes down because your interest rates are lower, that will help the affordability issue out as well. But you got to get inflation under control first. In fact, that segues perfectly into the next article. Phoenix Business Journal says the future Federal Reserve interest rate cuts may hinge on Trump policies. Obviously, we know the results of the election at this point. And so now what does that mean for us as Phoenicians living here in this wonderful city? Okay. The Federal Reserve interest rate cut Thursday was the latest expected move. Guys, by the way, did you know? Amongst all the things going on with the election, the Fed met like they normally were scheduled to do, and they cut rates again, another 25 basis points, a quarter of a point. So, guys, it's down now 75 basis points from where it was just a couple months ago. What has that done to the 30-year fix? I'm glad you asked because I'm sure they're super cheap now, right? They just got slashed. No, that actually did not happen. You can see right now that rates are today at 6.92%. Guys, 6.92%. And we had 75 basis points cut from the Federal Reserve. Why? Well, the reason because that is happening is simply because the bond market, the traders, the smart money, if you will, don't believe because they still go to the grocery store and they see the price of bread. They still see the price of eggs. They still see how much their auto insurance is costing them, et cetera. And so they don't believe that even though the CPI is at 2.7, 2.8% right now, and the Fed's target rate is 2%, they don't believe it's really possibly that low. The jobs report last week came out, guys, or 2 weeks ago came out, and it was not good. It was negative job growth because if you take out the government sector of job growth, which was the only job growth that actually increased, then you would have a decrease in the overall job growth of the economy, and the U.S. taxpayer funds the government jobs. So organic growth, not happening at least 2 weeks ago. And so now you have the rate still hovering at 6.92%, not even reacting at all hardly to the Fed last week, reducing the federal funds rate 25 basis points. So very interesting, right? So what will happen in 2025? That remains to be seen. But we do know who's in the office. And so we do know a couple things that you can expect, okay? The Fed is in a tricky spot because consumers, as well as the incoming Trump administration, are counting on more rate cuts, i.e. affordability. That, however, is not a given, okay? And then, and because economists and experts widely believe former and President-elect Donald Trump's policies proposed and tax cuts proposed could push inflation up, which in turn would dampen the Fed's enthusiasm for further rate cuts. Could happen in the short term, guys. It's possible, okay? I think I have the right to say I think you should go up or down a little bit. Trump said, talking about the Fed, and we'll see what happens, okay? The Fed likely to take a more data-disciplined approach into additional rate cuts. Well, there's a novel concept. It's about time. I mean, geez, that's what they should be working off of regardless, guys. Back in 2022, when every house was having 10 offers on it, that was a good indicator, in my humble opinion, Mr. Jerome Powell, to raise the rates just a little bit. Just step it up a little bit. Why? Because I don't think anybody would complain if a seller puts the house in the market in early 22 and they had 2 offers or maybe 3 offers on the property as opposed to 10 or 12. That was happening. And it was too crazy. But if you would have adjusted rates a little bit then, that could maybe, starved off this issue from happening to where you had to now jack the rates up and cause the housing market to come to a complete stop almost in the second half of 2022. I'm just saying, what do I know about economics? Not as much as he does, but I do know enough that that's what I would have done, and I think that would have helped. Just saying. What do you guys think? Comment below. Let us know if you agree with that, or if you think the Fed has done the right thing in 2022 by jacking the rates up so quick. And if they're doing the right thing now, more importantly, by coming down a little bit, and what you think will happen in the short and the long term. Would love to hear your comments. If you're watching the replay, let us know that too as well. But you have some stuff here, what you think is going to happen. Obviously, Trump is going to do some more rate cuts. He's going to try to have his rate cuts, tax rate cuts, stay permanent. That's what everyone believes. That were set to expire here in January of 2026. So now he has the opportunity to make them permanent, which hopefully would spur the economy. I know there's two sides of the coin to every single argument, so this is not a political show, so we're not going to even talk about all that. All we're trying to focus on here is the data. Okay, but one group of public companies in Arizona saw the biggest gains in market capitalization when stocks soared on November 6th, a day after the U.S. presidential election. Guys, as you know, Wall Street boomed the next day after the president was elected, or won the election, I should say. And so here are the Arizona companies, if you're curious, that benefited the most on November 6th. AudioEye, Tucson-based internet software provider, Western Alliance Bancorp, Grand Canyon Education, Reliance, Cable One, Benchmark Electronics, et cetera, and 5 Arizona public companies saw the biggest percent gains in their share price on the 6th of November. Grand Canyon Education, AudioEye, Cable One, same property. So you can see what's going on there. Just thought I'd throw a little Arizona flavor into the stock market for you if you're watching the show today. And then we're going to talk about one more thing here. The title is From Taxes to Tariffs. I know a lot of people are worried about the tariffs and don't really understand what that means. How Trump's victory could affect businesses. Okay. The tax picture. Okay. For businesses, this would presumably mean that the general business-friendly tax provisions of the TCJA would become permanent, such as a 20% deduction for pass-through business income, 100% bonus depreciation, expensing for research and development, and the deduction for net interest limitation based on EBITDA, Miller said. So guys, the small business community economy booms when hearing things like this, which should, hopefully, and should provide job creation and stimulate the economy. Outside of the TCGMA, Miller said Trump's campaign platform included a 15% tax rate for domestic production and the elimination of taxes on tips and overtime, which she said could result in a competitive hiring business market for business hiring workers in hourly wage jobs. Okay. Overtime pay. Obviously, we know Trump doesn't want to tax people working overtime. The manufacturing picture, immigration and workforce, artificial intelligence impact, et cetera, et cetera. So I know it's a lot right there. I could go through the whole thing, but let me just say this. When it comes to the tariffs, I guess we'll explain this. On the tariff side, guys, what Trump is proposing is a tariff on Chinese goods. And so how that works is currently when American manufacturers send goods over to China, there's a tariff, but when they send goods back to us, there is no tariff, and therefore it creates an imbalance on the tax associated with imports and exports. And so what he wants to do, obviously, is put a tariff on the goods coming in here so that the manufacturer obviously will hopefully bring manufacturing of their widgets back to America and not have it dependent on the Chinese government overseeing a lot of stuff that we're actually dependent on, like, I don't know, ibuprofen and things like that, right? Just pretty much everything. As we all know, China has most of the manufacturing for the world. So that's what it's trying to do. In the short term, what could happen with that? In the long term, it just, is someone's opinion, I guess, right? And we're not going to go into all that. But it's interesting to see the difference in style between the two administrations. Okay, so I'm going to jump back in here and we're going to talk about a few more things and be done and let you get back to your day. So thank you for tuning in on Veterans Day. We really appreciate it. Okay. Labor Department releases AI principles. Here's what they mean for businesses. This is interesting, but if some of y'all don't own a business, we're not going to mess with all this. So we're just going to skip over this one for now in the interest of time. Okay. Here's how key Arizona business issues fared at the polls. Okay. So we're going to talk about a couple. Here we go. Prop 479, which will continue a half-cent transportation sales tax in Maricopa County, has more than 60% of the votes in favor. So that half-cent sales tax will continue in Arizona. Prop 312, which will allow property owners to apply for a property tax refund if governments don't enforce illegal campus or other nuisance laws. had more than 58% of the votes in favor of that. And then a couple on the restaurant and hospitality side. Prop 138, or Tipped Workers Protection Act, would have impacted how tipped employees, especially those in restaurants, were paid. But 75% of voters opted against that measure. Okay. And then the other one was Prop 138 would have allowed for restaurant owners to rely more on tips to pay employees. Eatery operators said the proposition would give them more breathing room in an industry with infamously tight profit margins. And then in Glendale, Prop 499 would have set a minimum wage of $20 an hour for hotel and event workers in the city. As of the morning of November 6, 57% of voters rejected that measure. Okay, so these are some of them. Now, there were more props on the ballot, but these four are the ones that are focused on today in terms of the local economy and elections. Okay, this is interesting, guys. The surprising zip code has Arizona's hottest housing market. You want to know where the hottest housing in Arizona is? Here you go. We're going to break it down per zip codes. I'm going to go right to the chart right here. You can see that Flagstaff, 86005 in Coconino County, has the hottest housing market, ranked 91 in the nation in Arizona. Phoenix, 85016. Where is that? I'm glad you asked. 85016 is right here, in the historic district in Uptown Phoenix. Actually, the historic district is more on the west side, of the 51. So this is that area right here. Okay, let's go back to where the map. Tucson, 85704 in Pima County. 85008 is the number 4. 85008, guys, is right in this area in downtown. Okay, you can see it right there in the purple by Phoenix Sky Harbor. That's interesting. And then you have 85014. 85014, another Phoenix zip code. Anything that starts with 850 is that. We can even zoom in a little bit for you guys. Okay. And then you have Mesa, 85203. So let's go to that one real quick. Mesa 85203 is right here, this pink area in the central North Mesa area. And then you have Camp Verde, Pine Top, and Scottsdale made the list here at 85254, the magic zip code, they call it. And that is right here, this blue one that borders Paradise Valley to the south, Phoenix to the west, and of course, it's Scottsdale right here. So it's a great zip code to be living in. But those are the 20 hottest housing markets currently. You got Carefree and made the list way up here, and a couple of Scottsdale zip codes at 85255 and 85258, which is North Scottsdale. Here's 55, and here's the 101, right? Here's 55, and here's the airport for Scottsdale, and here's 58 right here. That borders the Salt River Pima Native American Reservation, this big orange area right there. Okay, so moving on, guys, and we're done. But the California developer secures a prime Scottsdale parcel in an all-cash deal for $38 million right here north of the 101. You can see that site right there is going to develop some multifamily, it sounds like. Guys, Amazon delivering drones, now flying the skies of Arizona. Guys, we're having drones now starting to deliver packages from Amazon right around the corner here in November. Right now in Arizona. It's going to happen in the west side of the valley. Cities such as Goodyear, Avondale, Glendale, Phoenix, and Tolleson are starting that drone delivery. Crazy, right? Mattel Venture Park, part of the VAI Resort, which is one of the iconic construction projects that is going to shape the landscape of the Phoenix area, has a small delay. And yes, that is not the ocean. That is the man-made lake that they are building with a beach to it. It is going to be incredible with a roller coaster. You can see right here, the Hot Wheels roller coaster and all kinds of fun stuff. Mattel theme park is coming. It's just been delayed now to the end of 2025. Like all construction projects being delayed, it seems like, right? And then Sam Fox, there he is, the emitter of Fox Concepts for the restaurants that are amazing in the Phoenix area, is going national with some expansions that he is looking to do. And then I thought this was interesting. This is a Phoenix apartment complex that sold for $142 million, 604 units in the Phoenix area. All cash transaction, guys. People are still investing in the Phoenix metro area. That's just one more reason to believe when we say that people are investing, they are investing in the Phoenix area, guys. It is blowing up, guys. And the number one reason why Phoenix will not be coming soon, if we have a little bit of a market dip or downturn, will not be like it was in 2009, 10, 8, etc., 11, is the number one reason is because of jobs. That's right, guys. Back then, Phoenix was heavily relied on the construction, housing, tourism, service-based industries. And when the housing went down, it got clobbered because the vast majority of people's income went from the jobs in those industries that were tied to the housing market. Well, now you don't have that. Now you have the semiconductor market, you have tech, you have manufacturing, you have a lot of bio. I can't think of that bio. What is it? Bio. Not chemistry, but anyways, you have biosciences. There it is. You have a lot going on here in Phoenix that you didn't have before. So diversification of the job market is huge, with companies investing millions and billions into the Phoenix area for their particular segment. So it is a bright future for Phoenix economic outlook. I don't know what's going to happen to housing in terms of, how it's going to continue to go in Phoenix, but based upon supply and demand, currently it's going down a little bit, but that's going to be a blip in the radar, in my opinion, in the long term. So be like me. If you're going to buy a house, it could go down. Guys, as I just told you, mine went down 24% after I purchased, thinking the market was kind of starting to bottom out in 2008. It went down another 24%. And today, it is up from $327,100 to $710,000. So it just takes time. And in this situation, that was what? 14, 16 years. So it took 16 years, but here we are. And by the way, it didn't take 16 years to get positive. It only took about 5 to get positive, 4 to get positive. And then from there, it's just been all gravy, if you will. Okay. So guys, if you have any questions, 480-660-5974, give us a call. Love to chat with you about your situation and jumping in or jumping out of the housing market. Let me know. Comment below. Let's get the conversation going. And until next Monday, keep it classy, Phoenix, and happy Veterans Day. Thank a veteran today.